All right, so the next stage of what we want to do when we're discussing Fibonacci is really understand this idea of the last major move, because that really is the basis of getting a good Fibonacci on the chart. Now, I will tell you, sadly, I see this from traders I respect. I see this from traders that have been doing supposedly Fibonacci analysis for a long, long time. I'm not claiming to be an expert, but I think one of the biggest mistakes traders make is they simply look at whatever time frame it is, and they pick the high and the low in the chart and just draw Fibonacci. I think that's about the most obtuse thing you can do. And I'm going to be a little harsh here, because I think that half the reason most traders are so turned off by Fibonacci is because they see it used in just a completely wrong way. Let me also mention that there's no such thing as just one last major move on a chart, because last major move is fairly subjective as well. Okay? That means that for some of you, you might look at one point to another point and say that's the most significant rally or sell-off. Sometimes there's a significant rally and a significant sell-off. So you can have two sets of Fibonacci levels drawn on your chart. Now let's complicate this even further. What if you go to a different time frame? There could be, again, different touch points that create the last major move on a 15 that could be very different than, say, a 240 or even a 30. So not only are you looking at the pair and the multiple rallies and sell-offs that are on that chart, you're also looking at the different time frames, and there'll be different moves on the different time frames. So it's very important that you work on the time frame that you are most likely to be setting up for a potential trade. If you are trading a 30-minute chart, at least start there. Will there be potential important Fibonacci levels, say on a daily? You know, I would tell you, if you're going to work up two charts in anticipation there are being levels that you may not see on an intraday 30, go ahead and work out the daily, because the daily is the most psychologically relevant time frame in any market. It doesn't mean it's the most traded, doesn't mean it's the most tradable, it just simply means it's the most psychologically relevant. The most people do tend to watch that time frame. So if you're going to work up two time frames, go ahead and work up, say, whatever time frame you're anticipating you may actually look to be trading, and then if you have the time or want to, go ahead and do the daily as well. All right, so let's talk about this last major move concept, because that is the biggest hurdle for most traders. The last major move, just as the name suggests, is last meaning most recent, major meaning significant, and move meaning rally or sell-off. Now, there's lots of rallies or sell-offs on this 15-minute chart of the Aussie, isn't there? What I like to do and what I recommend you do is you go ahead and use your text tool. You see how I'm grabbing this right here? And what you can do is just go ahead and start labeling A, start labeling, B, and look for where you feel the last major rally or sell-off started and ended. Okay? Sometimes you'll even see that there are little moves within the move. Let me add one other element to this. Clean. What does clean mean? I like to see as few retracements within the last major move as possible. So from A to about, I don't know, maybe almost halfway up, this was pretty clean price action. But all of a sudden, notice how we started pulling back here? We're climbing up, but we're pulling back over and over and over again. Too much of this starts to affect the quality of the Fibonacci. So as clean a move as you can find is helpful. All right? Don't simply look at the high and the low on the chart, because number one, it's subjective. If you're using the market memory that we talked about, specific to each time frame that I taught in our series back in February, then at least you're on the right track of looking at relevant data. If you're not, then just picking the high and low on your screen becomes a completely random decision. Okay? And that's what you'll see a lot of traders do. They'll just pick the low in the chart, They'll pick the high in the chart and they'll just draw Fibonacci. Does this move, and I'm just going to go ahead and show you what you're often going to see as Fibonacci, sadly, is basically this. You're going to see low to high, just like this. Now, does low to high, as I'm reflecting it right now, does that represent the last major move, or were there smaller moves within this? There are plenty of smaller moves within this. There's no way this can be considered the last major move. Was it a major move? Sure. Was it the last? No. Was it clean? Certainly not. Okay? So don't fall into the trap of just picking the high and the low that you see on your screen. That is not the way Fibonacci is supposed to be calculated. Okay? All right. So high to low is what you're not supposed to do. These smaller moves like A to B is a reflection of what you are supposed to do. Let me also add in one extra element, as long as we're talking about this last major move. Because I've defined what is a valid set of points from which we are to draw Fibonacci, then it stands to say also that there will be pairs and or time frames that there is not a valid Fibonacci on. Okay? So don't believe that just because there was a move on a chart or just because you have a chart, there's going to be a valid Fibonacci that you can currently use to identify support and resistance. That is not the case. There will be times that you will see a certain time frame of a pair just doesn't have a good clean last major move. And you can absolutely use alternative support and resistance levels like psychological levels, like pivots, like chart patterns. Okay? And there's other alternatives, and you can use those in lieu of Fibonacci. So don't force Fibonacci. If there's not a good clean last major move, don't force it. In fact, let's just, for the sake of getting something drawn in this chart, I think there's a pretty good move from A to B. That would be the most recent significant. Okay, notice that it's not the most significant by any means, but it is the most recent significant last major move in that priority. Most recent and significant rally or sell-off. Most recent, last, that would be A to B. It's not the most major, but it is filling the first priority, which is the most recent. Okay? I think also we could consider C here. So what I want you to do is basically look at the rallies and the sell-offs on the chart. And at the peaks and valleys of these rallies and sell-offs, just label them. Certainly, A to B could have been the last major rally, and B to C could have been the last major sell-off. Some people might even say, well, what about C to this level right here, which I can call D? You know what? Go ahead and mark it, because here's the great thing about Fibonacci. The only way you're going to find a good last major move is by drawing the Fibonacci's, and there are some clues as to how Fibonacci will basically confirm itself. Okay? So what we're going to do now is I'm going to go ahead and show you how to set up your Fibonacci so you have the levels that I think are important to watch, and you also have the price levels marked right on the tool after you draw them.